it's not necessarily a failure of the US dollar, but rather a failure of debt-based collateral. The United States has a huge appetite to borrow. And I don't believe, I'm actually correct. The US federal government national debt is approaching $40 trillion. So my story starts with the US Treasury collateral getting out of control. And I think the end of the story would be physical gold and silver.
Before we dive in, a quick whisper about today's sponsor, Ghost Founder. You know that moment when an idea jumps from someday to why not today? Ghost Founder lives in that moment. Ghost Founder takes the sketch from your napkin, gives it a heartbeat, and walks it out into the world. Fast. While everyone else is still writing pitch decks, the ghosts are wiring prototypes, lining up seed investors, and tuning your ops. Product market fit isn't just a hope, it's an outcome. If you're the kind of renegade who refuses to wait for permission, visit ghostfounder.com. Because around here, we scope things, build things, and fund things, in that order. Ghost Founder, the quiet engine behind loud breakthroughs.
In this episode of The Covered Call, we're joined by Eric Yeung, investor, commentator, and one of the sharpest observers of the global shift playing out between East and West. Eric built his career in manufacturing across China and Hong Kong before turning his focus to gold, sound money, and the deeper forces reshaping the world economy. At a time when gold is broken above $4,000, silver over 50, Bitcoin over 100K, and global trade feels somewhat unhinged, Eric's perspective on China's rise and the West's response couldn't be more timely. Eric, thank you so much for taking the time to join us today.
Well, thank you, gentlemen, for having me on your show.
Yeah, hey Eric. Yeah, I'm so excited that we could have you on. I'm glad that we could connect on X. I've been following you for a while, right? And I always see you as this really cool King Kong guy on X that knows so much about gold and silver. For our audience, right? Could you just give us a bit of a backdrop of what got you into this space and got your focus on the precious metals?
So, Jason, I've been investing for decades, privately as a private citizen. As Lovis mentioned, my business is primarily in the contract manufacturing side. So I take orders from my international customers, and I build these products in China at the factories, and then I coordinate the logistics to have it shipped out end to end, delivered to my customers' doorsteps. So what happened really was during the great financial crisis between 2008 and 2010, I got really franchised with the it, with the entire U.S. dollar, U.S. hegemony system in finance. The way that things just fell apart so quickly, and the way that they had to, push out quantitative easing to dig themselves out of that hole, which essentially they never really dug themselves out of that hole. They kicked the can down the road for the last, 15 or so years, right? But anyway, long story short, after the GFC, I bought my first big batch of physical gold. And then, of course, as you know, gold went from approximately 1,900 US dollars, and it sank all the way to $1,100 in 2018. So I, sat on that gold for almost 10 years, backholding, you can call it that. I bought it, like my average price was at around $1,600 back then. And then came along Donald Trump, his first term as president. And I don't know if you guys remember, but he forced Powell to pivot to, start cutting rates. That was, I believe, in 2019 when the repo crisis hit. So I saw that and I said, this is unsustainable. And I really backed up the truck and I loaded up. And that was around 1,200, 1,300 US dollars. So, net, my average cost for physical gold is pretty low. And of course, and during that time, I also loaded up on silver. And my average cost for silver is at around $14 US dollars per troy ounce. So that's the story, essentially, how I got into precious metals.
So it was just a loss of trust for you, like I guess with your I'm guessing with your contract manufacturing is import export, and you would then also be very have intimate knowledge of how not only the logistics works but also the financial systems, right? And is it something you saw gave you loss of trust, and you feel like gold and silver is something that is trustworthy? Would I be correct in
Well,
assuming that?
Jason, I saw a lot of things. I mean, one thing I saw was that when I first started out in the contract manufacturing business decades ago, everybody took US dollars. That was the de facto currency that everybody took. And then over time, Chinese factories actually switched over to RMB, like the RMB yen, which is China's currency. The reason why? Well, they pay taxes in RMB yen. Okay? So initially, I think, because the RMB yen was pretty weak, that was before 2008, people preferred US dollars. And to tell you the truth, back then, I'm talking about, over 15 years ago, 20 years ago, right? There was actually two prices for RMB yen. Like there was a black market price and the official price. But then as China got stronger, like I said, that like the official price and the so-called black market price of RMB yen, conversion or like the exchange rate to USD, they merged as basically the official one, and then we speed on forwards, and like I said, what happened? People demanded RMB yen. So you're right, Jason. I had the front row seat in the entire process of China, getting stronger, becoming the world manufacturing hub, and also the beginning of China's path to de-dollarize. So I was at the front row. I saw
Yeah, you
that.
could see all the tectonic shifts happening in real time, right?
Correct. Yes, and that absolutely helped, Jason, to push me into gold and silver a bit more than I would say like a regular person, because you're correct. I dealt with foreign exchange all day. I have customers all over the world. So I saw that. And like I said, when the repo crisis came and when Trump came to office during his first term and forced Powell to pivot, it did really have real world consequences at the front lines. And, again, that really physically pushed me into, backing up the truck to load up on gold and silver.
Yeah. Do you think to some regard, I mean, similarly, it also pushed whole, other sovereign nations to do the same, seeing that kind of unfold?
I I think so. I think so. I think that was the first step. But then what really accelerated the process, I believe, was when the US and its European partners, if I may use that word, decided to freeze Russian
Russia.
assets. Yeah,
Yeah.
Russian's assets, right? US dollar assets or like euro assets.
Yeah.
When Russia began its special military operations in Ukraine. So I know people always remind me, they say, well, most of it is just held at Euroclear, right? Okay. That's the clearing,
Yeah.
uh, institution for all these securities. I understand that. But like, as I just said, it's the US empire. They
Yeah.
operate as one. So you cannot, cut that out and pretend that that's something else. It is not. So when that happens, I think a lot of the global South sovereigns, like you just mentioned, just really stepped on the gas and accelerated in their de-dollarization efforts by buying physical gold. I mean, it's in the numbers. I don't need to say it. It's almost like after that event, I think the central banks buying gold was exceeded 1,000 metric tons per year on average. And that's just the numbers that we know, okay? Because these are bilateral purchases, bilateral agreements, meaning that they're private transactions between central banks and smelters or central banks and central banks. So they volunteer the information to the World Gold Council, for example, right? So we don't really know if it's only 1,000 metric tons, but for what they reported, is massive in the last 5 years in terms of physical gold buying.
Yeah. Eric, I tell you one anecdote. So I'm Singaporean, and I saw on the Straits Times, the newspaper, after the invasion of Ukraine. I think it was the start of 2023. Singapore became the third largest gold buyer in the world from January to September 2023. Right, buying a total of 75 tons. And what makes me like sit up to pay attention was when a country like Singapore that's so entrenched in the whole global financial system decides to do that. It's a huge flag, right? It's telling you something. I don't know what you think, but of course, so many other, let's say, global South countries were also doing the same thing. But for me to see Singapore do that, I don't know. It was an even louder sort of trumpet call for me.
You're correct. I mean, the signals are everywhere. If you open your eyes and actually observe what's happening, like you said, Singapore is one of them, and then you have India repatriating gold from the Bank of England. Okay, so that happened in the last couple of years, and then you have China's PBOC, which is the People's Bank of China. Their central bank has been buying gold on a monthly basis nonstop since the Russian special military operations. So, but like I just said, the signals are everywhere. We are overwhelmed by the signals of this happening.
Eric, do you think that we're witnessing failure of like fiat currencies in general, or do you think this is contained more to the US dollar, or how do you look at that?
I see it as a more of a geopolitical shift. What I mean by that is that it's not necessarily a failure of the US dollar, but rather a failure of debt-based collateral. What I mean by that is when you look at something like the US Treasury bonds, like bonds, bills, or notes, what the world right now uses it as is a collateral for interbanking liquidity. So if you have two banks, drafting repurchase agreements, repo agreements with each other, you use U.S. Treasury as the collateral to access the liquidity. Okay, that's like 70% of that right now. They use U.S. Treasury collateral, but the problem is the United States has a huge appetite to borrow. And I believe, I'm actually, I don't believe, I'm actually correct. The US federal government national debt is approaching $40 trillion. So this is like on a parabolic, path, basically. And with that in mind, how stable is that collateral for the rest of the world, especially when the US and its European partners are so ready to push a button to freeze that collateral if somebody like Russia, who they don't like, are the, owners of said collateral. You see where I'm coming from? So my story starts with the U.S. Treasury collateral getting out of control. And I think the end of the story would be physical gold and silver. Because physical gold is being positioned right now by the BRICS countries to be a not a replacement. I wouldn't use the word replacement, but a parallel collateral that they can use if they do not want to use the US Treasury bonds as collateral.
Yeah, so it's not direct confrontation, it's more like an alternative, and it creates a
Correct.
marketplace almost, right?
Well, yeah, let me just paint a picture for you, right? You guys already know this, right? But like when Russia, started that special military operations in Ukraine, what's another thing that the US did? They just basically cut Russia out of the SWIFT system. Okay?
Mm.
The SWIFT system is like, how these international banks talk to each other to send money back and forth. So they cut Russia out of it. So what if, let's say, I'm just, hypothetical situation. Let's say 2 years time, the US and its European partners don't like China, and they cut China out of SWIFT, or they just simply don't clear, China's US Treasury transactions. What if that happens?
Yeah,
Like
yeah.
then the entire trade between global South countries will come to a stop. They can't have that. It's extremely irresponsible if the global South countries, the BRICS countries, don't find an alternative to the US Treasury system as global collateral. And that's what I believe is happening. They are
Yeah.
aggressively pushing for physical gold to be that not replacement, an alternative to the
Yeah.
US Treasury bond.
I mean, it's perfectly reasonable if you're anybody other than the US, right?
Well,
Because
absolutely.
if you're producing commodities, you're producing goods, and 80% of the world population don't live in Western Europe or the United States, right? So it makes complete sense that they would have their own exchange system, right? So it's not really a crazy concept. It just so happens that this is kind of how the hegemon had set it up, that they have an issue with it.
Especially since the gatekeepers have explicitly shown you that they're willing to take away the neutrality of that reserve asset when unilaterally, right?
Absolutely. I mean, there are signposts as well to, show your audience that this may be happening imminently. I'm not talking about 10 years. I'm talking about 6 months, maybe 12 months, but for sure within 24 months. Okay.
Yeah.
What I
Could
mean
you
by
share
that
some
is,
with us? Yeah.
well, absolutely. Look at like the one chart that I sent you guys is the SHFE. That's the Shanghai Futures Exchange. Vote the warrants, the gold warrants in that vote.
Yeah.
So if you take a look at the chart, for the
It's a
last
hockey stick up, right?
it's a hockey stick, exactly. For the last 10
Yeah.
years or 15 years, if you spread it even further, like, the gold warrants bounce between, let's just say, 4 to 8 metric tons, around there. Okay. And then all of a sudden in 2024, it shot up one step
Mm.
to maybe 20 metric tons. And then the action really intensified in 2025. Like you said, Jason, you said hockey stick. Yes, it's a hockey stick. Because now we're at what? Almost 100 metric tons. We're at
Yeah.
not like 89.6 right now or something, right? So we are almost at 100. So a lot of people ask me what the heck is going on. Why is the Chinese stocking up on all this gold at the Shanghai Futures Exchange? Well, first of all, you got to understand that the Shanghai Futures Exchange vault is operated by ICBC and BOC. And if the
That's
audience don't know, yeah, sorry.
ICBC is sorry. Go let the audience know who is ICBC and BOC is Bank of China, is it?
Yeah, BOC is Bank of China. ICBC is the Industrial and Commercial Bank of China.
Mm-hmm.
Okay, so that's significant because they all play the both. So, and then what else is happening in China? Well, China just announced in June that the Shanghai Gold Exchange, that's a separate thing. That's not the Shanghai Futures Exchange, okay? That's the Shanghai Gold Exchange, which trades a lot of physical gold. They're going to set up an offshore vault in Hong Kong. And more to come. Like after Hong Kong, they plan to do it in Saudi Arabia, Singapore. Okay, Singapore is named. Maybe in Europe, if the Europeans allow it, and India, Russia, etc. Okay, so this is like actually not me, guessing or like speculating. This is mainstream news. Everybody knows. But what I think is going on with the SHFE 100 metric tons of gold is that eventually, let's say it gets up to 200 or 300 metric tons, they're going to ship that to the Hong Kong SGE offshore vault. And, a lot of people say, why would they do that? Well, if you want to use physical gold as a collateral, you need the physical gold. And the fact is that the trading partners of China trust the physical gold more if it is located in Hong Kong rather than mainland China. Okay, they rather, if they can, they rather have it in their own backyard, right? Like in Singapore, in your own, like, guarded by your military, or like in India, right? Like, SGE vault, they rather have that. But the first step is Hong Kong, because being a Singaporean, Jason, you probably know, Hong Kong has what? Free trade.
Yeah.
We have what? We have a currency, the Hong Kong dollar is pegged to the US dollar, right? What else do we have? We don't have any capital controls. So, capital can move in and out. So if you are a trading partner, you're Singapore, you're my trading partner. I'm China, right? You're Jason. You run, big corporation in Singapore. What would you rather have? Would you rather have the collateral gold in Hong Kong's SGE vault or in China or in mainland China? I let you choose.
For sure,
it's a
Hong Kong.
no-brainer. It's
For
a
sure, Hong
no-brainer,
Kong.
right? Exactly, right? So this is happening. The chief executive of Hong Kong came out constantly, okay, in the last 6 months and said that they want 2,000 metric tons of physical gold in Hong Kong within 3 years. Now,
okay, just for the audience, the chief executive is something like Prime Minister in Hong Kong, right?
Yeah, it's basically the governor of Hong Kong.
Yeah.
You can call that.
Yeah,
and
2,000 tons is a lot of gold, right? That's like maybe the amount that, I don't know, Italy has, or twice of what Switzerland has, for example, right?
No, but let me put it into context for your audience, right? 2,000 metric tons. The COMEX, which is the futures exchange in New York, right, in the US, it has 1,400 metric tons of physical gold. So keep that number in mind, approximately 1,400 metric tons. The LBMA, they claim they have 8,800, but you got to break it down, right? Because the LBMA also holds like the Bank of England gold, and it holds like foreign central bank gold, okay? So if you break it down, I have a chart, I send it to you guys. You can show it to your audience, pull it up. The actual free float is less than 1,000.
Right, so it'll be double. It'll be double the free float.
But I'm not going to stop there, right? I'm going to tell you one more thing. In February this year, the LBMA didn't have any gold to ship out. They have to add like 60 days on the delivery time. Okay? So when that happened, Bloomberg and Reuters, they reported it. I said this, and also a lot of other really smart people, that the LBM is zero free float. Okay? If, let's say, Jason, you're my trading partner, and I'm selling you gold, and I'm telling you, Jason, I don't have this stuff right now. You got to give me 60 days to buy it so that I can fulfill my contract. What is my actual free float, Jason? If I tell you that,
yeah,
and you're my customer,
it's zero or negative, right? But does that mean it was actually a default then? Is that a technical default?
Absolutely. It's a technical default. Okay, I agree with that. I use that word. So anyway, back to the Hong Kong though. We are like, situation because we're going really far off from our main story. Okay. My point is that Hong Kong, if they have 2,000 metric tons of free float, which is what he's
Mhm.
saying, okay, stuff that can be utilized, that is a game changer for China. That is a game changer. That would do exactly what I just told you guys that they want to do, which is to utilize physical gold as a collateral for the offshore interbanking liquidity and also trade. Okay? It's a game changer. And by the way, do you guys read the news? Today, Russia announced that it's launching a RMB sovereign bond.
Oh, so
That's
Russia's
huge.
gonna
Yeah.
offer a bond denominated in yuan.
In the end, that's right. So think about this. And then I'll tell you one more thing. I mean, this is like just me as a citizen reporter in Hong Kong, right? So I actually go by the Hong Kong Gold Exchange a lot, just because they're in Shanwan, okay? Like right near Central, basically. I go down there a lot. And there are a lot of Russian guys hanging around that place. Let's put it that way, okay? So something's happening. Something is happening. Also, it's reported that Russia in the last month or two, stop shipping physical gold to its proxies. Okay? So what Russia used to do is to ship the gold it mines to their proxy, satellite countries, etc. Right? I don't want to name names. And then those countries, in the eyes of the US, launder that gold, okay? Into quotation marks clean money for Russia. But now this time, what's happening? Russia is not sending gold to these proxies. So my prediction is that physical gold that Russia is holding on to is probably going to Hong Kong as well.
Interesting. All this in the effort to fund this parallel exchange system, basically, rather
Well,
than
parallel
using U.S.
collateral
Treasury.
system. Collateral
Yes,
system.
sorry. Yes,
Yes.
you're right. Collateral system.
But actually, Eric, honestly, if you were to write a book, like some sci-fi book, and you told people that, hey, the whole world's financial system and everybody's hard work and everybody's endeavors, it's all based on something that is actually somebody else's debt, and that it can be created out of thin air, and it's actually unpayable, unsustainable at the moment, mathematically impossible to pay off, but everyone still uses that as the risk-free collateral. It would be almost too unbelievable to write down in a book, right? So it's like reality is stranger than fiction at the moment.
Absolutely,
So
Jason. I think also gold is not going to cut it. Silver is probably also going to be used as collateral by some of these global south countries. Because you got to remember, Jason, some of these BRICS countries or global south countries, they're rich in silver, but they don't have a lot of gold, right? So I think what's going to happen is they will have gold as the primary collateral. And then, they also allow some of these smaller countries to use physical silver as collateral.
yeah,
So
and I guess
that's my prediction. Yeah.
silver's so important in industry. It, the value, once it goes to its real value, it would also be a lot higher, right? So
Correct. Because at $50, it's very difficult to use silver as a collateral because of its physical size, right? But if
yeah,
silver gets to, let's say, 200, $500, then it makes more economic sense
yeah,
to use silver as a collateral. Yeah.
yeah.
So
And so I'll just go quickly, okay? Eric, last thing, why aren't any sovereigns clamoring for Bitcoin? Are they doing it silently under the table, or you think it doesn't fit the bill to do what needs to be done for collateralizing the system?
Well, that's a very good question. And I got some new info. Like, first of all, China already answered your question because Chinese banks don't allow Bitcoin conversion into fiat RMB yet. So essentially, Bitcoin is not even legal in China, right? We all know this. And the reason why, well, did you guys read this Bloomberg news that came out this morning? Okay, so China's cybersecurity agency is they accused the US government of orchestrating the theft of about $13 billion worth of Bitcoin
I did see that actually.
from a Bitcoin mining pool. Okay, so there's actually more in the original Chinese text. They claim that it was a hard break. Okay, so they don't say much, but let's say it's a hard break by the U.S. government. How did someone break Bitcoin's encryption? May I dare to say that maybe the U.S. government has enough quantum computing power to do that. Okay, so another thing that happened is that you guys are aware of this, but in the last couple of days, some really ancient wallets dumped a lot of Bitcoin.
Yeah, I saw
Like
that.
all the way,
Like
all the way back to the
10,000
Satoshi days.
Bitcoin or something. Yeah.
Yeah, exactly, right? So why is that? Why is that? What I think, and also like another thing is that you guys probably aware of this. Global liquidity is going up. Like everybody's printing money nonstop. Why the heck is Bitcoin stuck in this range and periodically dumping? Think about that. Normally, Bitcoin is the best smoke alarm, right, for liquidity. If
Yeah.
there's liquidity in the system, Bitcoin cryptos go up. This time it's going down. So I think somebody in the know knows what happened. Like China is telling us that it happened. So how can a man-made technology that can be cracked? I'm just answering your question now, right? That can
Of
be
course.
cracked. Okay, how can that be a collateral? Like for the global south, like it can't. Like especially if the U.S. government controls a lot of it, and if the U.S. government can crack it, right? So
Yeah.
I think that's a sufficient enough answer. I don't want to go, any more into it because then you guys are going to get a lot of hate mail. Okay, if I start
It's all right.
talking more about that.
Yeah, it's all right.
So,
No, but thank you. That was illuminating. I have similar sentiments. But yeah, thanks for giving us your view.
no problem.
Lovis is thinking now whether he should be
I'm
selling all his Bitcoin.
I need to find a quick way to convert Bitcoin to gold. Stat. Well, Eric, you mentioned earlier, what if silver would go to $250, $500 equivalent value, then it becomes more practical for to be collateral. So I saw somewhere that in China, where most solar panels are made, most electronics are made, most industrial things that require physical silver, the at least temporarily, and you would know way better than me, but that it was already trading at like $100 an ounce, whereas I can still go out and buy physical coins for closer to 50. So I know that there's like a lot of silver used in parts, and it's not really economical to go out and recycle it until it hits a certain price. And what other drivers are there that would push silver up to what you said, like $250, $500?
I think right now, you guys are probably not aware of this, but the global free float of physical silver, that's the available silver to ship, okay? Free float globally. Guess how much that silver is worth? $36.8 billion. You know how small that is? It's not exactly.
Nothing.
That's why we're in this predicament, because China, by the way, China's SGE and SHFE, the two exchanges that I mentioned earlier in this program, I gave you guys a chart, okay, and showed your audience, like, the actual physical silver drain, okay? Like from those two places. Basically, it's down to 1,400 metric tons.
Yeah, help me find the right one real quick, Eric.
Yep, that's the one. That's the one.
Okay.
Perfect. So audience can see that. So basically, we're down to 1,400 metric tons. And I
Okay, so
believe that the actual free float is like around 1,000, maybe less, maybe less.
And
So
could you give us some context? What is like a global mining capacity of silver? Is it 800,000 or what's the? Do you
well,
know?
the deficit is around, I believe, 5,000 metric tons a year. So there's a deficit,
Hmm.
mining deficit. The actual amount of silver that's being mined per year, I believe, is around 20,000 metric tons a year.
Okay.
It's either 20 or 50. I'm sorry, I don't have that number in front of me. But
Okay. But
my whole point,
yeah,
but
a
that's not the
thousand.
importance, right?
Yeah.
We have to look at
Yeah.
the deficit, which is like 5,000. 5,000 is deficit per year, and we're in the fifth year of deficit. So every year they are just drawing from the above ground storage, the free float that they have. And like I said, we're down to like 20,000 metric tons globally, which is $36.8 billion. But listen, guys, I don't think they have 20,000 metric tons globally
Hmm.
of free float. Looking at these numbers, LBMA, I mean, the LBMA numbers are not to be trusted. I sent you guys an article. Say the LBMA saying in 2021 that they made an accounting mistake and they overstated their silver holdings by more than 3,000 metric tons. So how can I trust the numbers, right? When they just
Nice
randomly
mistake.
come out and say they got an accounting mistake. That's the one. 3,300 metric tons. So my whole point is, if you look at the global silver market right now, everywhere I see backwardation. Backwardation meaning that the spot price, which is the physical silver you can get your hands on right away, okay, is more expensive than the futures price. We're seeing that everywhere. So that means, the market is telling us, guys, that like the shortage is real. It's not me dreaming it up. The numbers are telling me that this is real. And look at the price of silver right now. It's over 50 again.
yeah,
Have you guys noticed? Right? I think
yeah,
it's like 50. It's insane. It's 52.80 right now. It's crazy. It went up like 4%. It went up a
yeah,
dollar since we started talking on the show. Think about that.
yeah.
So if I go
And
back to, yeah, anyway, go ahead. Yeah, sorry.
and I mean, and how it got here too, right? I mean, it was kind of bobbing around, but like the last few months were just you know, hyperbolic curve, basically, both for gold and for silver. So that's also
Yeah.
kind of the shocking part. The rate of acceleration is like insane.
Well, $50 is just stupid. There's nobody in the right mind that's going to sell their physical silver at $50 and make a couple bucks, right? Like, I mean, it's not
Hmm.
going to replenish the above ground free float of physical silver. So I think like maybe 100 as the first step to shake some of like the strongholders out, like myself. I own a lot of physical silver, right? And that might give them a year or two. I don't know how long that's gonna last. And then like I said, maybe we'll be off to 200, 250 at that point. After that.
So, Eric, tell me where I'm wrong, right? I was a silver bug in 2008 as well, and I've been following silver quite closely. And then I worked in the solar industry, so I know that basically without silver, you can't get these panels to work, and definitely not as efficiently, and not for such a long lifespan, right? So, and I think that runs true for so many other countless electronic applications. So we've seen recently with China saying, "Hey, we might slow down the export of refined rare earths," right? And the the effects of such a statement were huge, right, on the global level. But if we run into a shortage of silver, I would say that the impact it would have on global industry would also be quite monumental. And at the same time, it's not something that's political where one party can say, okay, we will now let you have our silver. It's more like there's not enough of it. We have a deficit. And the only way we could actually maybe resolve that deficit is if the price was high enough that it makes sense to go pick up old solar panels to then recycle that silver. But that's not going to happen at $50 from what I understand. Did I go off track in any of
No,
those
no.
statements?
Jason, everything you said is spot on, but I may add this, right? You just reminded me. The first step, you're describing mercantilism. That's
Yeah.
what you're describing, okay? Which my friend Vince Lancy has been talking about for 2 years plus, okay? But the first step before like everything that you just talked about happens is export control, which is already happening. Like, I mean, well, China announced they're going to start export controlling silver in 2026, January. So we are like a month away from China hitting, that export control. And guess what happened? The U.S., USGS, I believe is the U.S. Geological Society.
Or geological survey or something like that. Yeah.
Survey, something like that, right?
Yeah.
So
Yeah.
I'm sorry,
Yeah.
I don't know the exact name of the acronym. But anyway, USGS declared that after months of investigation, 262 investigation, I believe, right? And that 262 analysis or 282 analysis. Again, I don't remember the exact number, but anyway, after months of analysis, they have declared physical silver officially to be a critical mineral in the US. So that allows Donald Trump to do what? To implement export controls on physical silver. And unlike tariffs, Donald Trump putting export controls on silver, on a critical mineral, do not need congressional approval. Think
Oh.
about that. Think about that. That's huge, right? So before we even get to what you just talked about, like new technologies, which exist by the way, right? Like the reason why industries don't save on silver being so cheap. Why
Yeah.
the heck would you waste money on technology to, let's say, plate silver on copper and do that kind of stuff? It adds cost, right? So right now, what they do, they just use pure silver because it's cheap, right? So, but then the first step before everything that you just talked about happen, export controls, that's going to bring the silver price up to, let's say, 100, right? I don't even believe 100 is feasible for the situation that we're in. It has to be over 100. Okay, that's my personal opinion. But
To
let's say we
clear the
get to
market, right?
exactly. Let's say we get to 200. And Jason, what you just said, everything happens. Recycling, new technologies, all that happens at 200. Then the market stabilizes, you see, right?
Yeah.
But they can't do that until we get to a fair market price. $50 is like a clown show. It's a joke. 100 is better, but it's still not, sustainable, right? So we have to get up there, get that number up
Yeah. And
before,
we
yeah.
we haven't even talked about you mentioned earlier that, some countries might use it as collateral. So we haven't really touched on the fact that there might be a monetary aspect to silver as well, not just the industrial requirements, right?
Oh, absolutely. India is already doing it. India announced that it's going to allow its citizens to use up to 10 kilograms of silver to be collateral for loans. Think about that. Well, also gold. 1 kilogram of gold or 10 kilograms of silver. That's huge. So India is remonetizing physical gold and silver into its banking system as collateral. There you have it.
Well, so all these actually 10 years ago, if you were to read, or even 5 years ago, if you were to read any of these news articles, it would all be gigantic, right, in terms of what it means for the gold and silver markets. But nowadays, you're reading almost like 2 of these headlines a day.
I say that a lot on my X account. I keep saying it. I keep saying that I'm so busy because every day it's like I'm bombarded with exactly what you're saying, Jason, with major changes to the system.
So,
Eric, in the beginning, you were starting to explain this chart with the LBMA and the COMEX, and I kind of cut you off to get the show rolling properly. But
Could we go back and you elaborate a little bit on that, how that whole relationship works?
Well, it's simple, right? There was basically the LBMA is what they call the spot market or the physical market. They call it that, but in reality, it's just like a lot of what we call paper promissory notes. So I'm just going to give you some numbers, right? Like for gold, for example, is 100 to 1. So 100 paper contracts to one physical transaction at the LBMA. And the COMEX, as we all know, is a futures market. So futures market meaning that you can long or short futures contracts. I'm not going to get any more into that. If your audience want to know what a futures market is, they can type it on in Grok, and Grok will explain it to them. That's an entire essay in itself. ETF, simple, right? That's the exchange traded funds like the GLD or SLV. So how the entire system works in the West is they have a certain amount of free float of gold, physical gold and silver at the LBMA, at the COMEX, and at the ETFs that they can actually access. And when people don't want the physical, most of the time in the past, before the BRICS countries started getting out of U.S. treasuries or just not not adding to the U.S. treasuries or not rolling over, let the U.S. treasuries mature, right? Okay. In the past, when the BRICS countries were buying a lot of U.S. treasuries, well, not a lot of people want the physical gold and silver. Like comparatively speaking, they were fine just getting the price exposure with the paper contracts, right? So this system worked with the limited amount of free float. They just shipped it around all over the place to whichever location needs the physical gold and silver. And by the way, this system, the three bubbles that you see here, is also how they suppress the prices of physical gold and silver. But I don't think we have time to explain it in a reasonable, understandable manner today. We
But it's
can
okay. It's
do
okay.
another show if you guys want to. Yeah, sure.
Yeah, the guests can
Yeah,
probably go find out more, and then if they have specific questions, they can reach you on X. But
correct.
yeah, basically, it's there's a lot of paper in the system, so that will, if I was to try and reduce it for like as if I was talking to my 5-year-old son, it's like there's a lot of paper in the system which reduces the demand of physical, right? And so then it in a way suppresses the price. But if the day comes where the paper is no good anymore and everybody says give me cold hard cash, in this case cold hard silver, then you might see a run on the whole system, which is maybe what we're seeing right now. Am I correct?
So yeah, I think that's part of it, Jason. Like definitely, like it dilutes the fact that there's so much paper. It dilutes the demand for physical as well.
Mm-hmm.
By definition, right? I mean, if it's a pure physical market, you don't offer paper, then like you're not diluting demand with paper. But
Yeah.
but it's more to that. It's more to that. If we just say that, then the bankers come out and they attack us, right? So I explain it in a very detailed manner of
Mm-hmm.
how they actually suppress the prices of gold and silver with this system. And your listeners can go on my X account, like you said, and if they search for it, they'll find my exact explanation on how it works.
Yeah, yeah. I love your Twitter feed. It's a wealth of information. So anyone interested, just spend some time, have a nice hot coffee, and then just scroll through Eric's posts, and you'll learn a lot on how the whole market works.
So Eric, I'm clearly the least knowledgeable guy here on the call, but I know that there's a whole other side to this, right? So we've had the good fortune of having Luke Roman on here, for example, and he is talking about the kind of the U.S. perspective. And officially, the U.S. is one of the biggest gold bugs, right, in the world, holding vast amounts of gold. Whether or not they actually have it, nobody really knows. At least not all of it. But then there's this theory that's been around for a while that, well, if they would just reprice gold even to today's value in the books, it would help out a lot in collateralizing all the debt that they have. But then maybe that's also an additional motivation to actually let the gold price go way higher, right? Maybe 20,000 per ounce or something like that. So how does that play into your thinking, if at all?
Well, I think I agree with Luke. Luke actually talked about how the U.S. is potentially going to revalue U.S. Treasury physical gold at
Yeah.
let's say
So,
$10,000 or $20,000
so
to
that
get
would
some
be
money, right?
so-called
Yeah.
that would be so-called gold bonds, right?
No, that's a separate thing. Okay.
Oh, separate. Okay.
So what he's talking about is the U.S. Treasury has 8,133 metric tons of physical gold,
Mm-hmm.
free and clear. So that's not a liability. They have it supposedly, and some of it at Fort Knox. Anyway, so Luke is talking about how, let's say, gold gets to $10,000, which is not a fairy tale. It's possible. We're at 4,000. We are on our way to 5,000. So 10,000, I don't think it's impossible. It's possible. So we get the $10,000, and the U.S. Treasury issues a whole bunch of gold certificates to the Fed, and the Fed creates money out of thin air, okay, and deposit the equivalent value to those gold certificates to the TGA, which is the Treasury General Account. So it's not gold bonds; it's gold certificates. Okay,
Mm-hmm.
that's what they do.
Right.
That's the magic trick. Okay, they create money. I don't like using the word create money. I like to use the word like printing money. But when I feed it into Grok doesn't like it. Grok used the word money creation. So anyway, money creation. So how much money does the U.S. Treasury get out of the 8,133 metric tons of physical gold at 10,000 US dollars per troy ounce? They get around $2.6 trillion. So I did some analysis, and on the long end of U.S. Treasury bonds, the foreigners, like I'm talking about all foreigners, right? Like Europeans, China, Russia, theirs is frozen, but like India, whoever, right? All the foreigners who own long dated, like I'm talking about 30 years or above, US Treasury bonds, amounts to around $2.1 trillion. Okay, so that's the dollar amount. So with $2.6 trillion, doesn't sound like a lot because the US is adding like $1 trillion every couple months right now of that. Actually, would help the U.S. Treasury to repatriate, or at least they don't need to repatriate. They just need to buy up a lot of the marginal long duration U.S. Treasury bonds out there to control the long end. So they can do YCC, which is yield curve control, a lot more effectively with the additional US dollars in the TGA. So at least that's the theory, okay? I don't know if you guys get this, but listening to me saying all that stuff is basically just kicking the can down the road a couple more years.
Yeah.
Okay?
Right.
That's
Yeah.
what that does.
Makes sense.
That's
Yeah.
what it does. Yeah.
Eric, since you're on the topic of kicking the can down the road, right? Can you give us your view on what this whole thing, all the buzz about stablecoins and the Genius Act? It sounds like more kicking of cans, but maybe could you break it down for us?
Super good question, Jason. I really did a deep dive into that. So what that is like you guys are aware, right? All these stablecoins and under the Genius Act, they're gonna force the stablecoin companies to buy U.S. Treasury bonds to back up the stablecoins. All right. So that's the catch right there. So if you have like a stable coin like Tether, they're going to force Tether to buy a whole bunch of US treasuries. So the stable coins become a proxy of US treasury buying. All right. So that's like another way, since the BRICS countries are buying less US treasury bonds, or like they simply, like I said, they're simply not rolling over. They're letting the old bonds mature. There's a new customer right there, right? Like the stablecoin guys. Now, the next question is, what are the use cases for stablecoins? Well, so far is the Bitcoin and crypto casino. I mean, I have some hard numbers. 70% of all Bitcoin purchases go through stablecoins. All right, right there.
Yeah.
And I think it's around the same for crypto. So the bigger that market is, the more stable coins are going to be are needed, and the more U.S. Treasuries are being bought. So that's just another way for them to recycle U.S. dollars into U.S. Treasuries. And I believe what's going to happen is like because that casino thing, it's a double-edged sword, right? So it doesn't only work in the U.S. government's benefit because it also sucks up liquidity. It's a liquidity sink. Like I'm talking about the cryptos, right? The cryptos and the Bitcoin. So what I think will happen is the U.S. government is going to force the tech giants like Meta, like Google, maybe even X, right? Like Twitter, X, whatever you call it, Microsoft. They're going to force these guys to launch or put stable coins in as the required currency for people who want to buy their digital services, at least some of them or a lot of them. So let's say I'm a guy in Hong Kong right now. Okay. You know what? I use Google and I'm forced to, convert my Hong Kong dollars to US dollars to pay for my Google online services. But that doesn't really do much for the US Treasury market because I buy the US dollars and that's it. It's not being recycled into US Treasuries, right? But let's say Google tells me, Eric Yeung, they say, Eric, we're going to launch Google stablecoin. And we don't accept US dollars anymore. You have to convert your Hong Kong dollars to US dollars to buy these Google stablecoins to pay for your Google Drive or whatever, right? Your data service or your email, whatever you're using. Well, then Eric Yeung inadvertently is buying, is supporting the US Treasury market because I'm buying stable coins that are buying US Treasuries. You see how that works? And that's what all the big names are talking about. Like, I mean, I think Brent Johnson, the bullshit guy, he's saying, oh, that's a ruthless way of people will flock to this, right? Like, I mean, I'm not flocking to it, guys. I'm not flocking to it. I'm just lazy, okay? I'm a lazy foreigner. I'm a lazy guy sitting in Hong Kong saying, I'm paying $100 for my Google service, and what the hell? If you want me to buy some stable coins to continue to use the Google service, I'll freaking do it.
Whatever, right?
That's it. Whatever. Exactly. That's it. I think they'll get some ticks, like get some customers for that, and I don't know how successful it will be. I mean, they're still, I think they're still working on how they're going to launch it. Okay, because you got to remember, right? If Google and Facebook and all these guys are holding all these stable coins, right? And the actual US dollar equity is buying US treasuries. How is it going to work on their balance sheet? So I think they are, working with JP Morgan to figure all that out. Does it make sense?
Yeah.
Like before they launch it, right? So that's it. Yeah.
Okay,
Well,
thank you.
So I have it on pretty good authority that Tether has already been doing that to very, very large proportion. And that the Tether guys, the founders, actually were super shocked that they were basically allowed, like that the government would allow them to keep doing it because their business model is they take in dollars and they issue stablecoin, right? And then there's this whole controversy. Well, do they actually have the dollars? Blah, 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 blah. Well, so they most likely have, it's basically like fractional reserves. So they hold on to some dollars, but they do want that capital to produce yield, right? So then they go and buy treasuries. And I think
and they make money on the yield, right? Basically. And so I think that by accident they kind of almost gave the model for this, what they're now proposing to go global with. The thing that I don't understand is that in the example that you gave, Eric, it doesn't actually create any new demand for dollars, right? It's just in a different system. So you're just kind of like bifurcating.
Unless they pump Bitcoin to like $1 million a coin, and then that.
Okay. To answer this question, they're not creating new demand for dollars, but they're creating new demand for U.S. Treasuries.
For U.S. Treasury, okay, right.
Right. That's what they're concerned about, right? They're concerned about recycling U.S. dollars into U.S. Treasuries, which, like, you know, a guy like me or Jason, we will be forced to do it because we're lazy and we're not going to go out and use a Linux or whatever the heck, like, you know, open source stuff out there. We're not going to do that. We're going to just pay the $100, buy the stablecoin, Google stablecoin, and use the Google service. Okay, it's going to happen. I think it's going to happen. It's just like basically going to happen. Nothing I can do about it, but like I ain't going to be happy about it. I ain't going to be volunteering to do it. I just have to do it because I'm lazy. That's it.
But then what about if they would just say, like, what if Trump goes to Visa and MasterCard and tells them to do the same thing? Because I mean, that's the effective payment layer for most stuff in the US and beyond.
I think Jason, they can't do it. Like, I mean, they probably got AI models running 24 hours a day to figure this out. Okay? Like what the repercussions are. And I bet you they can't do it for everything. Because if they do, the entire thing will just probably fall apart. Okay?
Yeah.
Like I said, they can't. How are they going to figure out like how these companies hold, like, you know, all these assets on the balance sheet?
Yeah.
You know, because like I said, the US dollar is recycled to buy US Treasury bonds, right? So, okay. So you're holding US Treasury bonds and basically you're borrowing against it down the road for cash, for liquidity, right? That's what got to happen if you're going to do that. So I don't know. Like, we have to see what happens.
Yeah, interesting.
Hey, Eric, we've been talking for nearly an hour already, or a bit more than an hour. So just before we start running low on energy and we say goodbye, and it's getting late for you in Hong Kong, I just wanted to quickly ask, right, as somebody that straddles both East and West, and you got your fingers on the pulse both sides, what's your view going forward 5-10 years? And for people that maybe like me or even Lovis, you know, there's a chance to live in the East or the West, in terms of living a free life where you can put your energy into your enterprise and you know, get a return of fruits of your labor and stuff like that. How do you see things panning out in with a 5-10 year sort of time horizon?
I always tell my followers this, the younger guys usually, like, go where you're comfortable and go where you can make money and go where the tax laws are simple, okay? Where you don't get taxed a lot. That's it. That's the criteria to have a fruitful life going forward. And for me, that's Hong Kong, because Hong Kong is a very simple tax system. We don't have sales tax. We don't tax gold. We don't tax silver. And as I just said early in the program, like, we don't have any capital controls. Capital can flow in and out. So for me, it's Hong Kong. But for other people, you know, some people like Switzerland, they move to Switzerland. Some people like Thailand, they move to Thailand. Or some people like Singapore, right? Like where you are, Jason. They love Singapore, so they move to Singapore. That's it.
And Eric, thank you so much for staying up for us. I totally enjoyed this episode. I can't wait to go and listen to it again. Maybe as things shake out and get more volatile, if you've got time, we'd love to have you on again. So thank you so much.
Absolutely, guys. Thank you very much for having me on.
Thanks, Eric. We'll link to your X profile. Is there anywhere else that you would like to send people if they want to read your stuff?
Just send your followers or your audience to my X account at KingKong9888. Yep, that's good. Thank you.
Perfect. Thanks so much. Okay, feel free to jump off.
And that wraps up our main conversation. But we're not done yet. We're going into overtime, where Jason and I unpack some insights, reflect on what just happened, and connect a few dots. And go.
Sorry, Lovis. I think you can't see me underneath the camera, like rubbing my hands. Like, it's so cool to hear somebody give so many
Oh,
details. Hey,
sorry.
Eric. Oh, he's, to give all the details about all the topics that I've been so interested in for so many years, right?
Yeah.
When he says
Yes.
2008, like 2008 was also when, made me see the world very differently back then as well, right?
Yeah.
Yeah. It's true that when he brings up these headlines, you're almost getting this normalcy bias now. It's normal now. It's normal now, right? I guess the world went a bit crazy during COVID or since 2008, and so all these things are normalized. But if you actually think about it, it's super unstable at the moment.
Yeah. I mean, I just know, like, just, talking to my German friends, for example, they're not thinking about gold, like not even a little bit, right? I mean, I remember before I was interested in Bitcoin, for example, or before you made me buy a bunch of gold and silver in 2018, I paid zero attention to it. Honestly, I mean, I kind of had it on my radar somewhat, but it was more like, "Oh, look what gold is doing. Go on about your
Yeah.
day." Like it didn't have any implication.
Yeah.
And then, I mean, so I don't know. My hack to, if you want to learn, is the way I kind of got over it to then pay more attention was take a small position, right? Because as soon as you have some money in it, not a lot, just a little bit of money in it, then all of a sudden you're like, oh, now I gotta
You're
study
invested.
up.
Yeah,
You're
you're
invested,
invested.
right?
Yeah.
So I think that's really good. So if somebody's like, well, I don't understand anything you're talking about, but sounds cool, my recommendation would be just, get yourself a silver coin, right? $50 ish. I mean, if you can find them, to be honest, physical, they're not, sometimes they're hard to get. But as soon as you have that in hand, your motivation will be so much higher to actually learn about this more and understand more of the details. And I mean, there is so much vast knowledge out there, but the challenge right now is it's super hard to keep up because right now everything is happening at the same time.
Yeah.
Um,
Yeah. I actually
but
think
then,
like we're witnessing this disorderly, almost I would say it's actually disorderly, right? Disorderly, yeah, entropy of the system. Like so much has been done, like to duct tape the system together, right? Hey, put in some emergency liquidity here. Let's change the rules a little bit there. But at the end of the day, if your whole house of cards or even whatever, maybe your whole concrete house, right, is built on this collateral, the foundations are a debt instrument that is never going to be paid back, it just won't work, right?
well, they need to put in the token burn mechanism like in Ethereum. Every time you make a transaction, a small amount of it gets burned. So that's how
The
you
problem
keep
is
the supply lower.
the problem is they've got the opposite. Every time there's a transaction, because of the fractional reserve system, you go 8x the money
Yeah,
supply, right? And a
exactly.
12. It's just crazy. It's
Exactly.
like, imagine telling somebody, hey, buy this coin, save your money in this coin. Every time somebody borrows money in this coin, you suddenly get more of these coins. It's this
You
magic
get,
money tree,
yeah.
right?
It's like, oh, it's a great value prop. Like if this was a stock of a company, right? You'd be like, wait, somebody else takes out a loan, I get diluted? Yes. It's like, no, thanks.
Sign me up, sign me up. Yeah. But I guess, yeah, man, I don't know. So many things happening, right? I just sent you the link on the chat if you want to pull it up for the Bitcoin. China saying that America stole Bitcoin. That's super hilarious, man. That's like what America usually accuses people like North Korea of doing, like hacking, like, oh, state-run hackers have broken into XYZ, accounts and stolen how many millions of dollars.
Yeah, so I did see the headline, but I didn't have time to read it so far.
conducted by a state-level hacking organization and suggests the U.S. seizure was part of a larger operation involving the same attackers. China's National Computer Virus Emergency Response Center accused the U.S. government of seizing 127,000 stolen Bitcoin, worth roughly $13 billion, that were originally hacked in 2020 from a Chinese mining pool. But I don't really understand. So wait, so the actual hacking was conducted in 2020, and they're just now announcing that they think it was the U.S. government? Or
No, I think somebody hacked it. They probably, I don't know. My first impression was then they got it back, and then now, or they got control of it somehow, and now the U.S. has taken it. But I don't know, man.
or it was like the government held it in custody because it was like part of maybe this original hacking investigation type of thing. Maybe.
Could be. You know, like how America can take some from the, what's it called? Is it the Silk Road or the dark? Is it the Silk Road? Silk Road, right? Where,
Yeah.
yeah.
Yeah. So what I meant to mention to Eric, which I was surprised to see actually, I logged into my US-based PayPal account yesterday, and I noticed that PayPal had launched a stablecoin, USDPY,
Mm-hmm.
and it's I don't even think this was recently. I'm pretty sure they had it before, and I just didn't quite realize it. But it's PayPal is a sizable player, international player for payment transactions online, and so if they're doing that, then I think that somewhat. I don't know, of course, if they then. If what Eric says about the Genius Act, that this in fact is a mandate on the stablecoin companies to then buy UST, then this is already happening. Right? Because PayPal is huge, especially outside of the US. I mean, they're big inside the US, but they're also big outside. I mean, it's one of probably one of the biggest payment transactors online for Germany, because Germany for the longest time couldn't figure out online payments at all. So you have PayPal like on 80% of all e-commerce websites in Germany, for sure.
Yeah. Yeah. And if every time somebody stores anything on PayPal, and even if they have it there for just a day, that thing can be used to purchase debt, like treasuries, to give you an interest, right?
Yeah, so I've run enough online business. Like PayPal is a terrible business partner. They they hold your funds for all kinds of reasons. What I mean is there's always a balance. There's actually substantial balances in your PayPal account that it's kind of like this limbo land where it's no longer in the buyer's account, no longer but it's not in the seller's account yet. So there's got to be billions, maybe tens of billions sitting on their balance sheet. So it's substantial.
Hey, dude, think about it this way, right? If they really do that, and people like China says, "Oh, really? Well, guess how much is sitting in Tencent and Alipay?" And maybe we would start using those funds to buy a bit of gold. You guys buy treasuries. We think gold's a better collateral, so we're gonna use that money that's sitting around in all these billions of accounts, and we're gonna, instead of leaving in the bank, or that it must be some form of digital token as well, right? But since it's got value as a digital RMB, we're gonna buy some gold as well.
Yeah. So there was something that we had talked about. I forget who said it before, right? Like one thing that China did very differently than the US with their tech is that Chinese finance sector and tech sector have integrated a long time ago.
Yeah.
And that never fully happened in the US. And maybe this is a way for the US to catch up a bit with better, less friction digital payments. And then but the thing about it again, man. So on one hand, you have
the sitting president signed an executive order saying, "Oh, there'll never be a central bank digital currency." On the other hand, they're pushing the stablecoin thing. It's like, you know, I mean, it's tomato, right?
It's blurring the line a lot, right?
Yeah. So I don't really know. But then the thing is that, I mean, having gone to China and used Alipay is already quite mature system. It's very low friction and it enables commerce within the country so easily. I think it'll be a minute before the US-based system will be actually better. And so you know, at the end, kind of what Eric was saying, right? Like, if you're comfortable, if you can make money, and the tax system is simple. So as long as the Eastern version of this payment system has a simpler method of taxation, and it allows you to make money more easily, then it'll win, right? Like, because it's this platform game is a winner takes all thing usually. You know, just like
Well, depends, right? I agree with you, winner takes all, but that's where states come in and say, sorry, you're not allowed to be part of that platform, right? Then you have that bifurcated system where then you have two different ecosystems and then you need bridges. So it's kind of like Soviet Union and everyone outside the Soviet Union, right? You're not allowed to trade outside unless you trade through the government entity that then allows you to trade outside, you know? And so if, let's say, you're right and the two systems coexist, at some point, if one system goes too far ahead and they don't agree to both use the same one, I would say the system that's losing out will ham-fistedly just block the exodus of capital that's going to the more efficient system. Yeah. Because if not, they basically get brain drain plus capital drain, right? So then it would be pretty ironic that the country that everybody is accusing of capital controls ends up being such a big capital suck that everyone wants to put their capital there, that different governments say, hey, you're not allowed.
Yeah, I mean, to be fair, I think it'll be a minute before China positions itself where you know, high net worth individuals and large corporations say, "Oh, I'm happy to store tons of capital there."
I don't think they want to do that. I don't think they want to. But if they allow you to, what I think will happen is if they allow you to just trade freely and go to Singapore with your yuan and get gold, what happens is it's not that people move to China. It's just that they go, "Oh yeah, I'm okay to sign contracts in RMB." And what that then does is then deliquifies or takes away liquidity from the Western system, right? Because all those transactions that used to happen in dollars and euros now start happening in RMB. Then you have a giant sucking sound. I don't think the average American's going to say, hey, I want to go live in Chongqing or something like that. But he might go and say, hey, if whatever system's so hard for me to use and taxation's high and whatever, yeah, I don't mind owning a factory and I don't mind earning RMB if I can then take that RMB to Singapore and convert it to gold or to, you know.
I mean, the other part of this is also the manufacturing dominance, right? So just like back in the day, you know, go 20, 30 years back, what Eric was describing, the Chinese companies were more than happy to get paid in USD because they would probably also have to buy a lot of high-tech equipment from Europe or from US for their factories.
Yeah.
So then they can go ahead and keep that USD offshore and they can go ahead and spend it investing in their business. So that's quite simple. But now with a somewhat shift, right, where they can now seriously buy very good quality equipment also inland, then it also makes them not, there's like, I can still accept USD, I still have use for it, but just not as much as I used to, you know?
Yeah.
So that's also a big factor.
So, dude, think about it, right? The reason people need US dollars is for because of the financial system and because of aviation and defense, right? those are the things that most non-allied powers or allied sovereigns have kind of say, okay, I'm invested in this. I own Citigroup, I own Goldman Sachs, I own Apple, I own, right? And I need to buy Boeing jets for my, or Airbus for my national carrier. And also we have a fleet of F-15s and we use Patriot missiles. So whatever price McConnell Dowell charges, Boeing charges, or Raytheon charges will pay up because we need it, right? And I think that's why this whole Ukraine thing's such a big deal, and why that was it the 80th, that military parade in China was also such a big deal. Because, and also that sortie that the Indians and the Pakistanis had, right? And the Indians somehow, supposedly, even Trump said it, got something handed to them, right, by these Chinese fourth gen jets, right, that are a quarter the price of the French Rafales that the Indians were flying. So all these things it just takes away market share of that token, if you want to think about it in cryptocurrency terms, right? Those tokens don't buy what you used to be able to buy anymore. And another ecosystem allows you to buy so much more for less. And they even allow you to take it out and convert it to gold. So
yeah, because then they're fixing one of the major issues, right? Because a lot of people are like, well, maybe you can't trust the US, well, but you also, a lot of people will say, well, you also can't trust the Chinese, right? So then, but then if you say, yeah, but that's fine, you don't have to trust us fully, here, gold conversion, this asset is no one's liability, then it really patches that hole quite well, right?
Exactly. They actually, and that's what Luke Roman always says, right? They keep saying, he keeps saying China doesn't want to be a hegemon because it's too much of a hassle. They just want to trade, like they just want a stable system so that they can compete on, and they want to trash everyone by working 80 hours a week and being smart with their iterative processes, right? They don't want to go and get involved with geopolitics globally. Of course, that's the argument, right? Who knows what's really happening behind closed doors? But hey, another thing that made me think about that hockey stick chart that you showed just now with the gold stocks. So if those 100 tons is what's available, and they want to bring Hong Kong's total vault capacity up to 2,000 tons, basically, right, what will help them a lot is if the price of gold in yuan goes up tremendously so that 2,000 tons is able to collateralize all that trade, right? So it's not a gold tonnage problem. They want it to be a gold price problem. So if you can cover all that surplus, deficit, whatever, trade imbalance with gold, the first thing you would think about is, how much is the gold stock worth today, and how much is our trade imbalance? And you say, it's not big enough. There's not enough gold. But actually, how you should be thinking is, with the amount of gold in place, what price does it have to get to so that we can clear the imbalance? You know what I mean? So it's not that Bitcoin's not big enough to it's not that there's not enough Bitcoin in the world. It's that the price of Bitcoin isn't high enough. You need the price of Bitcoin to be a certain price so that 21 million of it can cover the world, right? If you are a Bitcoin maxi. So for Bitcoin maximalists, they get it very intuitively. They just say, yeah, this is the price that Bitcoin needs to be so that we eat the world up, right? They keep going by market cap, right? They keep saying, we've jumped gold with market, we've jumped I don't know which currency by market cap. So what they're actually saying is Bitcoin prices need to go higher because there's only 21 million of it. And I think that same thing can be said of gold, but most people don't ever think about it that way. They always think about gold as if the price is static.
I need to figure out how to buy more gold.
Thanks, Eric, the gorilla. You got Lovis turned into a gold bug. We need to bring Eric on more often, man. I'm just looking at my phone. Gold's up 2%. Silver's up 4.5%.
Yeah, I know today it's been.
Damn. Yeah, man. Exciting times. I hope everything can stay stable as we go through these unstable developments. It's so funny to call it stable coins, right? But hey, guys, the world's burning. You need to put your trust in something we issue called a stable coin.
Peg it to the U.S. Treasury, basically. So I'm sure this has nothing to do with it, right? But you remember when we were doing the tokenomics stuff with Flow a few years ago, and at the time this Terra Luna ecosystem was like all the buzz, right?
Oh yeah. Come in.
And they actually called their stablecoin UST, right? And I'm pretty sure somebody at the Treasury or at the Fed saw that and was like, "Oh, that's a good idea." So we're gonna, and then they had to crash that system because it went way too viral, way too quickly. So they're like, "We're gonna take this over, but we don't want this one. We want our own." And it's gonna be UST, but it's gonna be backed by the US Treasury, basically. Treasury note, right? I don't know. Just who knows?
But Eric's right, man. Like everything's going up like crazy. It's all going bonkers. But Bitcoin's not participating, right?
Quite suppressed, yeah.
And I actually use strategy a lot as a micro strategy. MSTR is called strategy now. I use that as a beta, right, for what sentiment is on Bitcoin, because it's basically a play on the NAV premium that MicroStrategy has for the Bitcoin they hold in their treasury, right?
Right.
And MSTR's been struggling, man, like crazy. If you look at a chart, like a year ago, it blew off to like 560. It's currently at 226.
Yeah.
Right. So it's lost all that. And to me, it's just a sentiment proxy for Bitcoin. I'm not saying that it's not good to buy it. I mean, if you're a Bitcoin, you're really bullish Bitcoin, I think it's, pretty cool. But it just tells me that somehow the amount of attention being paid on Bitcoin is not that massive at the moment. Which is weird because 2-3 weeks ago when gold was, or 4 weeks ago when gold was going up to 4,400, everyone was talking about Bitcoin, right? Like on X. Everyone was saying, hey, gold's in a bubble. I'm selling my gold now to buy Bitcoin.
Yeah.
Yeah, anywho.
Yeah, I mean, so hard to know, man. It can also be that it's just Bitcoin is being heavily suppressed to give someone's billionaire buddy a cheaper buy-in, and then it shoots up to 300K in a couple months. Like, I wouldn't.
Possible too. Yeah, possible
it's not
too.
like Bitcoin is so freaking unpredictable, but time will tell, right?
But hey, man, we talked about it on my drive today, right? Convexity, anti-fragility,
Yeah.
optionality. So all these things offer you limited downside. Like the downside is it can go to zero, but you can't go negative. It can't blow you up, right?
Yeah, right.
But it could go to infinity on the upside. That's exaggeration, but you know what I mean, right? The price is not limited. However, if you hold a debt instrument, there's no upside whatsoever. Like Rick Rule always talks about it, right? That's a promise the government's going to keep. They will give you 4% a year, knowing that inflation's 10%. So that's the opposite. That gives you maybe optionality because when everything's crashing, that thing gives you buying power. But in the long run, you're dead.
Yeah, but you have to pay a carry on it, right? To also
Exactly.
have the optionality.
Yeah. So it's a call option for your optionality that has theta decay, right?
Yeah.
Anyway, my brain is a bit fried.
Yeah.
That
that's
was
good.
so much good info. Thank you, man. Thank you for that enjoyable evening episode.
My pleasure. My pleasure. Eric, thanks for roping in Eric. It was a great guest.
Yeah. And Eric, if you're listening, we really enjoyed it. Hopefully we can talk to you again at some point.